Saving starts with internet and wireless from Xfinity. Because when you get Xfinity Internet and add mobile, you can save up to $400 a year on wireless. Enjoy fast, reliable internet at home and nationwide 5G on the go, included at no extra cost. Get Xfinity Internet and mobile together and ask how to get an eligible 5G phone on us. And for a limited time, $300 back. Don't miss out. Go to Xfinity.com/start saving. Call 1-800-XFINITY or visit a store today. Restrictions apply. Savings based on optimized pricing. Actual savings may vary. Saving starts with internet and wireless from Xfinity. Because when you get Xfinity Internet and add mobile, you can save up to $400 a year on wireless. Enjoy fast, reliable internet at home and nationwide 5G on the go, included at no extra cost. Get Xfinity Internet and mobile together and ask how to get an eligible 5G phone on us. And for a limited time, $300 back. Don't miss out. Go to Xfinity.com/start saving. Call 1-800-XFINITY or visit a store today. Restrictions apply. Savings based on optimized pricing. Actual savings may vary.
This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin has very low fees, lower than many of the other crypto exchanges in the market. You can also stake your cryptocurrencies and keep 100% of the rewards. There are no fees. Other exchanges charge fees. OKCoin allows you to keep 100% of the rewards. Sign up with OKCoin, link in the description.
Hi, everyone. Welcome back to the Thinking Crypto channel. With me today is Jack McDonald, who's the CEO of PolySign and Standard Custody. Jack, great to be speaking with you today.
Thank you. Thanks for having me.
Jack, I'm excited to speak with you because there's a lot going on with PolySign partnerships and exciting news, and I want to learn more. But before we get there, let's start with your background. Where are you from? Where did you grow up?
I grew up in Chicago, the heart of the Midwest. I went to school on the East Coast, and I've been living in San Francisco for the last 20 years.
What did you do before you were working at PolySign? I believe I saw on your LinkedIn profile you're at UBS. Can you tell us a bit about your background there?
Sure. I've been in traditional finance basically my whole career before getting into the digital asset space. So went to law school, never practiced, got into Wall Street as an institutional stockbroker. I was a relationship manager at UBS that dealt with a lot of alternative asset managers, so hedge funds, pension plans, VCs, private equity, and then ended up joining a private company called Conifer that was based in San Francisco. Took over for the founder. We had a broker-dealer business and a fund administration business that I grew pretty meaningfully. Brought on Carlyle as an investor, and then ultimately sold those businesses to, I sold the broker-dealer to Cowen and sold the fund admin to another public company, SS&C. So history has a way of repeating itself. And that's how I got to know the guys at Cowen, or one of the ways. So
what pulled you into the crypto industry, and how did you end up at PolySign?
Well, I can tell you I had zero interest in joining a startup or necessarily in going into crypto. But after selling Conifer, I was meeting with a VC friend of mine who was an early investor in Ripple. And he said, you have to meet Arthur Brito. He's this fascinating guy. He's thinking about building a crypto custody business, and you should meet him. And so I met Arthur. I was immediately blown away by his intellect, his vision, and also just a super guy that I've gotten to know and become friends with, but to work with him, as well as really excited about some of the other board members that he was assembling. And so I decided to join a startup in the digital asset space. You know, I think I had a pedestrian understanding at the time of the difference between Bitcoin and blockchain, could maybe have wung it at a cocktail party or something, but have learned a tremendous amount over the last 3.5 years. And it's really been a great experience.
I want to get back to Arthur, but first I want to ask, what are you holding in your crypto portfolio since getting into the space? What respective coins or tokens?
Yeah, I'm pretty boring, I have to tell you. I own Bitcoin, which is my largest position, Ethereum, XRP. I own a little USDC and own some Solana.
Very nice. Tell us about Arthur, because he's a very private person, doesn't do any media. No, I don't think folks even know what he looks like. And as much as you can disclose that, there's a lot of people anxious to hear, well, who's Arthur? What does he look like? Who's this guy? What does he do? Right? If you can tell us a bit about him.
Yeah, well, I'll say two things. One, I want to respect his privacy. He's a very private person, and that's just his choice, and so I want to respect that. I can tell you that I've learned an enormous amount from him, and he's just a true intellect. He's a savant in terms of the way he thinks and the ideas he comes up with. He's a gentle giant, as I like to tell him. He's very passionate about what he does and his beliefs. He goes the extra mile of wanting to work with people to educate them. So he is very involved, with the day-to-day, where team members need his help. Well, he's not running the business day-to-day. He's definitely involved from a strategic standpoint. And he's become a friend. He's just a terrific person. I did ask him probably maybe 2 or 3 months into working with him. I said, Arthur, I'm going to be the CEO of this company that you founded. I just need to know, are you Satoshi? Because I was going to see all this. I don't think he'd mind my bursting the bubble, but he said, if you think about it, he said, if I was Satoshi, would I then gone in and basically designed and developed the XRP ledger, which is faster, more scalable, more environmentally friendly, cheaper, faster, better in every kind of, as you stack it up. And I said, that's a pretty good point. So I'm going to put that conspiracy theory to rest. I'll never know for sure, but I don't think he's Satoshi.
Well, a lot of people are going to be like, wow, okay. But because I see a lot of those tweets and the comments and the questions. So thank you for clarifying that.
Well, it's just my own personal opinion, but I take it for what it's worth.
So let's talk about PolySign. Crypto custodian. Tell us a bit about what services you offer, what makes it different from other custodians.
Sure, great question. So first, just to level set, PolySign is the parent company that we started a little over 3 years ago. And our mission there is to build enterprise-grade infrastructure powered by proprietary blockchain technology to focus on custody and settlement are the two areas that we're focused on. For custody, we decided to become a qualified custodian and get a license ultimately in New York and be a qualified custodian through a trust bank charter. And we established a subsidiary called Standard Custody and Trust. And so that's the business that we're delivering a custody solution out of. We will continue to develop more IP at the parent company level. We have a product that's targeting more settlement, which is probably a more of a 9-month sort of development before we bring that to market. We're working on some very interesting proof of concepts with some large global asset managers and global banks. So that's a little bit further off, but the market-facing business that we're launching first is Standard Custody and Trust. That business is chartered to provide custody and escrow services to institutions. So we differentiate ourselves from many of the providers out there in that we're only focused on institutions and we are focused on custody. So we're not trying to be an exchange. So we're not a retail and institutional exchange and custodian. So we're very different than a Coinbase or a Genesis or a Gemini in that regard, rather. We think of ourselves as also being differentiated in terms of the background of the people. So we've got people like Arthur, David Schwartz, Ripple's current CTO and chief cryptographer, as a board member and an advisor and investor. Also Tim Keeney, who ran all asset servicing businesses globally for BNY Mellon for 12 years, including custody, largest custodian on the planet. He's on our board and a very active advisor. So we've got a lot of heft on the cryptography, blockchain side, and also on the traditional finance side. So that's one of the differentiators. Another differentiator is we're the only custodian that has a blockchain at our core. And that's really important for a number of different reasons. They tend to do with the level of security that we offer, but also providing a very regulatory compliant framework that we can basically store and audit every step of every transaction, every authorization that's made, et cetera. And so that's something that certainly has impressed the regulators and the insurers that we work with, and we believe it's going to be a differentiator. We have another differentiator in terms of the product, and that we utilize services of independent third-party firms that help with the verification process when transfers are made. So oftentimes you'll have a quorum of approvals that would exist at an asset manager, let's say a hedge fund, and then typically that would come inside the four walls of a custodian, and there's an approval process there. We distribute that risk out through utilizing some third parties that have a very narrow, albeit very important aspect of the approval process. And through the technology we've built, we're able to harness that with an added layer of security. We essentially have a distributed risk, multi-step, multi-stage authorization process, all wrapped in a product and a service that can take a few minutes, literally, to transfer an asset. But we believe it's the most secure technology in the industry.
Wow. And can you tell us which blockchain you're using? Is it one that is out in the market, or one that you
Yeah, we built it ourselves. David and Arthur designed it. Importantly, it's a blockchain that serves a very specific purpose for us within the four-walled garden walls of standard custody. So we don't store other assets on the blockchain. We're not saying, hey, move an asset from here to there, but we use it from a security standpoint to do that.
Got it. So it's a private blockchain and proprietary, developed in-house, essentially.
That's right.
Got it. Tell us about the assets you're custodying, and which ones, as much as you can disclose, and maybe the total assets under management that you currently have.
Yeah, we were only approved to go live in the end of May, so we're still in the early days of onboarding our clients. The assets that we're supporting are all the green listed assets that exist on the DFS site. We also have been approved to have our own asset vetting policies. So if there's a Thinking Crypto token that gets launched that presumably is not already pre-vetted on the DFS site, that's something that we have our own process that's been approved by DFS, where we would run that asset through our kind of filter, both from a regulatory standpoint and from a technology standpoint. We self-certify, and then we report quarterly in arrears to the regulators that we're now supporting this asset. So we're starting with the more major coins, and depending upon where the opportunity exists for us with some client relationships that we have and where we see the industry evolving, our slate of assets will continue to evolve, as you'd expect.
Sure. Tell us about the partnerships that you have. We saw a big announcement with Cohen. Can you tell us about that partnership, and if there's any other names that you can let us know about that you're working
with? Yeah, sure. It's part of our Series B, which you're referencing. We just completed a $60 million Series B round about 2 months ago. Cowen, the investment bank, led the round. And we were purposely looking for a strategic investor to come in and help us grow the company. We very much believe in partnerships. We do believe that there will be this intersection between traditional capital markets and traditional finance, and then the decentralized nature of the digital asset ecosystem. And we also believe in evolution, not revolution. And so working within the framework, again, we have a lot of pedigree coming from traditional capital markets, and we wanted to harness that. I knew the Cowen guys, and specifically Dan Charney, the co-president, from having worked with Dan at UBS, but also Cowen bought the broker-dealer that I was running at Conifer, and really liked the way that firm not only approached that acquisition, but also just the way that they operate. They've been around for about 100 years. It's a top 10 investment bank in the US, and they have a very agile way, an entrepreneurial way of working with their clients and their people. Culturally, it's a great place that I've gotten a prism into, and they really are known for identifying megatrends and getting behind them holistically as an organization. A good example is what they're doing recently with SPACs, or prior to that with cannabis. And so I called Dan and asked him what their digital asset strategy was a number of months ago, and he said it's perfect timing. We're actually going through right now the strategic planning around how we are going to really re-platform our global markets business to support digital. And one thing we're not going to do is build our own custody platform. And so investing in PolySign and standard custody was a real strategic fit for them. And what we're looking to do with them is to support Cowen as they build out their business. You can think of us really as acting as a sub-custodian to the prime brokerage business that they have. They want to adopt their trading, their margin financing business, their stock loan business, et cetera, and trading, whether it's spot or derivatives or swap, but to support digital assets and all those different business units. And so we're working behind the scenes with them to come to market with a joint sort of product where we can be the custodian for clients, and they would do some of those other capital market services. And I will say the last 2 months has been highly instructive in terms of the learning through, I think we've had 60 or 70 different client conversations, and that thesis has been reaffirmed that clients of Cowen's want to continue to do business with Cowen. I think the ability to have a known and familiar face across the table where there's a partnership is established, and then leg into digital assets and by extension work with us is something that we're getting an enormous amount of really positive feedback on doing. And I think sometimes it's a bridge too far for some of these traditional asset managers to think about setting up accounts at a bunch of different crypto exchanges and going and identifying a new third-party custodian. Whereas through the Cowen partnership, I think we're really facilitating a much more seamless entree into digital assets for some of these managers.
Yeah.
We also have a new investor through Series B as well, blockchain.com, different type of business, more retail focused, more non-US than US, where Cowen's really institutional, more US than outside. Blockchain.com has a number of strategic initiatives to grow their business in the US and specifically to build out an institutional asset management brand for them. And so there are very strategic ways that we're planning to work with them to help facilitate their growth initiatives. And you'll see more, I think, partnership announcements from us coming out through the balance of the year and next.
So tell us a bit about the vision. I know you touched on some of it. Would it be that Standard Custody is providing custody service for banks, hedge funds, different investment firms? Would that be the target clientele, so to speak?
That's right. We think about single managers. So it could be a hedge fund, it could be a family office, it could be a pension plan. We're talking to some pension plans and endowments right now. I used to service that clientele in my old life. And increasingly through VC investments that they've made through VC managers or private equity managers are starting to come into possession of tokens in some instances or other types of digital assets. And so all of a sudden you've got these pensions and endowments who have a custodial need for an asset that they haven't held before. And so we're having some very interesting conversations with them. We've also designed our platform from day one to be compatible with the traditional service providers out there in the capital markets. So we're more than happy to be a sub-custodian for a larger bank. Being regulated in New York allows us to do that in a more profound way than if we had been licensed in a lesser jurisdiction of a Wyoming or South Dakota or Nevada or somewhere else, working with New York regulated financial institutions. So whether you appoint us directly or whether we act as a sub-custodian or potentially even license our software, which we're having some enterprise-like conversations, we're flexible in terms of how we'll approach a client partnership.
Well, it sounds like you got the coveted BIT license, which I know a lot of crypto companies, there's a long line for that.
Yeah.
That's awesome. Tell us about the custody and, do you guys have insurance and how is it stored? I'm assuming cold storage and you have your data centers and so forth. Can you tell us a bit about that?
Sure. I'll tell you what I can tell you, obviously. I'd love to have you sign an NDA and we'll do a demo for you at some point. But yes, we do have insurance. We got our insurance, our crime insurance through Marsh, which we're extremely happy with. They've been terrific to deal with. And really, I think, thoughtful in terms of how they're approaching the business, the relationships they have with the underwriters. We were received very favorably given the security profile I referenced earlier. Having a blockchain at our core is something that the regulators really took great note of, and I think treated us very well in the market as a result of that. We do have what we consider to be really better than cold storage type solution in place. And I say it's not exact cold storage because we have networked HSMs as part of our security shield, which many providers do. I think the legacy distinction between hot and cold storage is melting, if you will, if you'll pardon the expression, over time, because more and more of the equipment is networked. But we use HSM clusters as part of our approval process at the front end. We've got a lot of biometrics that we use and encrypted hardware, really end to end, that we think is quite unique. This use of third-party verification firms as part of our approval process is unique, and the ability to basically store business logic and run that through the HSMs through leveraging our blockchain is a really critical piece of how we're approaching the problem that we're solving for.
Sure. There was a question that came from like the community asking, given the, David Schwartz from Ripple, Arthur Brito, who's a co-founder of Ripple, are there plans for you guys to work with Ripple and potentially custody XRP for Ripple's clients? Any light you can shed there?
Yeah, that's certainly our hope. Right now we're a very regulatory compliant focused organization, and given what's going on with Ripple and the SEC, there seems to be a little bit of a hold on taking in new assets, but we absolutely look to partner with Ripple and Ripple holders of XRP going forward. We'd like to think we have an unfair advantage there with Arthur and David's pedigree, and that was the first asset that we onboarded through our dev, and as we were building out the tech. So we have a lot of friends at Ripple, and very much look forward to this part of their journey getting resolved satisfactorily and being out there in the market. And I think not only from a custody standpoint, there may be other ways that we can work with Ripple going forward. That's certainly my hope and expectation.
Sure. I remember speaking with David in an interview, and he talked about the private ledger aspect that he's looking to, a federated sidechains, I should say, on the XRP ledger. Would you guys ever, maybe this is on the roadmap, or maybe it's not, or it's something in the back burner, but integrate into the XRP ledger for settlement or moving funds or whatever it may be? Anything?
That's certainly something that we would want to explore with them. I personally am a big fan of what Ripple's doing, a big fan of Brad's, and where they go, I'm always interested to see. And to the extent that we have technology or solutions or services that are in our playbook that can be collaborative and supportive of what Ripple's mission is, we always want to identify those partnership opportunities and promote them.
Yeah, absolutely. Let's talk a bit about the SEC lawsuit as much as we can. And I know that there are probably certain things you can't speak of, but what are your thoughts on here? A lot of eyeballs on this lawsuit. Certainly, I, as an XRP holder, I think the SEC is in the wrong here. And I think a lot of people have those sentiments, and everybody wants to see what the outcome is going to be, because the SEC may use that determination to go after other crypto assets in the market. What are your thoughts on the entire situation, along with Gary Gensler and so forth?
I think it's a terrible Christmas present to have received. Let's just say that. Timing is everything. I don't quite understand that. And I should say I have zero inside baseball on this matter, and I'm probably best not opining on it. I do think, just in general, a speedy resolution will be very good for the industry overall. And I think, on a broader topic, that one of the factors I think that's holding back mainstream institutional adoption is this lack of regulatory clarity. And Gary Gensler coming in, he's got a lot of experience and knowledge around digital assets, which I think is a good thing. I think one of the takeaways for me and him essentially asking for more regulatory power to regulate the space is a validation that there's a there, right? That the whole digital asset movement and industry is meaningful. It needs to be addressed head on. And, I think regulation ultimately will be a positive for the industry once we get some clarity. Obviously, I hope that it's constructive. And I think if there's too much adverse regulation, obviously it's going to stymie innovation, and the innovation will go offshore. So I think the US specifically right now is in a bit of a quandary. My hope, and it's a big hope that I think is tough to deliver on, is there will also be some collaboration between the different regulators that are out there, because as you know, the taxonomy is really challenging here. And the fact that there are so many different regulators that have their toes or hands into different aspects of this industry, but there's just not this full scale sort of regulatory view is really challenging. And that's exacerbated by the global nature of this. So if we could at least have a unified view in the US, understanding there are different types of assets. Are they securities? And some are they commodities? Are they property? Are they currencies, et cetera? But I think having a holistic view, for me as a CEO of an infrastructure company, would be extremely helpful. And I think it's going to give the sort of clarity that a lot of institutional investors and other types of financial institutions are looking for before they can really, go deeper into the space.
Yeah, absolutely. And we saw with the infrastructure bill, there was some overreach, kind of snuck into that, hoping there's an amendment, or they're able to. It's not signed into law yet, but they may be able to adjust that. In addition, I know everybody's waiting for a Bitcoin ETF, and it of course sits on Gary Gensler's plate. So, what does your gut tell you that potentially we may see a Bitcoin ETF approved this year?
I think it feels to me like there will probably not be something approved this year. I'd like to think so, but I think you'll see more and more, I call them access products, that will continue to be developed. Some of them will be derivative, and there will continue to be Bitcoin tracker funds or other types of products developed outside the US. So my expectation is that the US is going to have to approve some kind of Bitcoin ETF, in the near future. Whether it's going to happen this year is a little bit of a wild card. I do think on the infrastructure bill, just on that front, the frustrating part for me is that there seems to be a lot of enthusiasm when it comes to collecting taxes, where the regulators seem to be motivated to, get some regulatory guidance out there. But I hope that it's more holistic than just on the front end of give me the information I need, and compel the different market participants to report so the government can collect taxes. I think we as an industry deserve much more than just tax collection guidance, which obviously is an important feature. And I'm all for investor protection and operating within a regulated framework. But as I said earlier, I think some clarity and comprehensive sort of legislation will be very, very helpful to the industry at large.
I want to circle back to PolySign and standard custody, because we just saw Visa purchase an NFT. I think Budweiser's launched it. I think they were doing the same thing. Will you guys look to provide services for custodying NFTs as well?
Absolutely. We're in a couple of conversations as we speak around doing that. And I think one of the really fun parts of being in this industry is that it evolves so quickly, right? And so, nobody knew what an NFT was a year and a half ago or whatever it was. And, all of a sudden it's quite the rage right now. There's a risk that you follow the shiny toy all the time. And so we need to remain focused. But I think, we're basically replatforming the capital markets. We're replatforming what it means to be providing banking infrastructure here at PolySign. And so NFTs, I think, are here to stay. Certainly the whole DeFi movement is something that we're extremely focused on. And I think it's going to have a profound change and a ripple effect on lots of different aspects of our, not only the financial services industry, but society at large. And so from a strategic product development standpoint, we're very much looking at these new products and services and trying to think about where within our strategic focus, we can either broaden our offering and or partner with other providers to bring to the market solutions which are compelling, secure, investor friendly, regulated, et cetera.
As far as the clients that you're talking to, the prospects, are there still folks who are on the fence, like, we're not sure about this digital asset crypto item? Can you take us behind the curtain? What are like some of their concerns? And is it like we just talked about the regulatory thing, or it's, we're not too sure about this disruptive technology yet? There's
a lot of interest in learning about the space. And as I referenced earlier, since the Cowen partnership, we've literally had 60 to 70 calls in 2 months. And the interest level ranges from, hey, love to learn more, to the PMs and the head traders have been investing for a while, to they've got a couple of holdings in a portfolio, but want to really broaden this out. And I think the three common factors that I take away most, in no particular order, are education, just broadly speaking. It may be the investment people who have an interest, but you've got to get a broader education in the operations folks, the compliance folks, the board level, et cetera. So a broader education of what does it mean to be investing in digital assets? What is the asset itself that we're holding? What are the ramifications, from a tax, from a compliance standpoint? How is it going to affect our fund management business, et cetera? And so getting comfortable and through further education is one factor. A second major factor is infrastructure. So once you decide as an organization you want to buy a digital asset, what does it mean for your current infrastructure needs? Does it mean we need a new accounting system? What's it going to mean to our audit? Can the same auditor who's been auditing my hedge fund for the last 10 years continue to audit it if I've got crypto in there? What does it mean from a risk management system? How do I report to my investors? Where am I getting the pricing feeds? All those sort of factors weigh into it. It's fueled our desire to really focus on this space, and given our experience that we have in the traditional capital markets, we have a very good understanding of what I'll call them traditional investors, hedge funds, private equity, VC, pension endowment, et cetera, family offices, what they need to run their business. And we're trying to build products and services and behave in a way that's very collaborative and really synthesizes with the current operational flow that they have. Again, working through Cowen is one way to do that, because Cowen has those not only the relationships but the requisite plumbing into these organizations, and we're trying to make it easy for investors to invest in custody with us. And then the third factor, the really gating item, which we've already touched on, is the regulatory clarity. So if you get comfortable with the investment side, I want to buy some digital assets. I'm now comfortable with the infrastructure, and the infrastructure, broadly speaking, has gotten a lot better over the last couple of years. You have more regulated, insured custodians. You've got folks like Luca who provide, good market data feeds, et cetera. And so that area is getting solved for day by day. I think the regulatory clarity piece is the big one.
Sure. This question just came to mind. Given that you built your own proprietary blockchain, a private blockchain, do you foresee that being a service that you would provide to some of these institutions via PolySign, that we can help you build your own blockchain or token or tokenize things, securities, whatever it may be? Would that be something on the roadmap? And you may be like, you may not be able to speak that, but I wanted to ask.
Yeah, we're not thinking about it from the standpoint of, we're not looking to, be like an R3 and here's Corda and I'm going to give you an SDK that you can then build your own blockchain. I'm going to give you the toolkit to do it. We do have some features around we're calling it Polynet, given the recent hack. We're going to probably rename that from a few weeks ago. This is just kind of in the lab, if you will, in the skunk works right now, but that's designed, it's another proprietary blockchain that really is designed to foster cross-product asset agnostic settlement, instant atomic settlement of asset transfers. And one of the things that you can do with that software is to create tokens. We really want to be a connective tissue, a network of networks between both digital and analog networks or ledgers that exist within different assets. So there's an example of using our blockchain that if you as an issuer want to create a token, and we're actually doing this right now in a POC, you can do that on our platform. But I think it would be more purposeful around something like that, as opposed to trying to commercialize our blockchain infrastructure and license that out for others to build their own blockchain. That's not really the business that we're in.
Yeah, that makes sense. Let's change gears a bit and talk about the crypto market as a whole. There's some saying, hey, we are still in the bull market. There's skeptics saying, I think we're heading into a bear market. What are your thoughts and feelings about it? And do you have a Bitcoin price prediction?
I am certainly long-term bullish. Won't surprise you. I'm in the industry. And I think the trend is up and to the right. We're going to continue to have, periods of volatility and pullbacks like we saw, over the last couple of months. My sense is that as more institutions come in, you'll see the volatility dampen, which is a positive. It becomes a self-fulfilling sort of prophecy. My Bitcoin specific price target, I would just say it's higher year end. I'm a buyer, but it's going to go higher and lower before then. But I think the trend is the friend. And when my aunts and uncles and cousins at the family reunion this summer, are getting shaken out and they ask, I say, hold your nose and buy more with a longer term horizon.
Good advice. And what are your thoughts on companies putting Bitcoin in their balance sheet? MicroStrategy, Tesla, and then we see El Salvador is going to make it a legal tender. I think today we heard about Cuba. They're going to be looking to adopt Bitcoin as well. What do you think about this trend? And do you see it continuing as well?
I think you'll see selective companies continue to do it. I think there's some companies that may be doing it for a little bit of PR. And I get that. I think, which is different than countries adopting it. I still think Bitcoin is a long way off before it becomes a real legal tender means of exchange in any sort of broad-based use. But I do think that for countries like Venezuela or El Salvador, where you have just rampant inflation, I was once told in Venezuela, you get your paycheck, you run and spend it immediately, like literally hoarding off the shelves, because the purchasing power of that will be less a week from now. There's no ability to save in these highly inflationary countries. And so for places like that, I think Bitcoin has a real use case. And from a balance sheet perspective, I think if you have a firm view on it being a real hedge against inflation, the true digital gold, that for certain companies, it does make sense to have it on the balance sheet. And you will see, I think, particularly more financial service-oriented companies starting to do that, the PayPals of the world or others, who are also developing a use case internally for digital assets. It will become part of not only a hedging strategy, but also from a kind of treasury management standpoint, a core component to how corporations manage their finances.
Yeah, absolutely. What are your thoughts on what seemed to be a mining ban by China, where miners started moving to other countries? And what was cool, a lot of them came to the United States.
Right.
They seem to be having a Bitcoin mining boom industry in the United States, creating jobs, revenues, and so forth. What are your thoughts about that?
I think that, net a positive. I think the real positive for me is just the breaking up of the centralized hub that we had in China, which, I don't think it should be centralized in any country. Say what you will about China, maybe not the best place to have, the bulk of the computing power centralized there. So I think about it more as just a net positive for the industry when the monopoly gets broken up, if you will. Net, that's a good thing. I don't have a long-term informed view on mining in the US vis-a-vis other countries. I think you're going to see a lot more proof of stake work going on anyways. And so I think on a relative importance basis, mining probably over time starts to decline a bit. But that's probably another conversation.
Let's talk about central bank digital currencies. We see different governments around the world are building their CBDCs. Here in the United States, there's talk about a digital dollar. I spoke to Chris Giancarlo, who's part of the Digital Dollar Project. One of the things I brought up was how does it maintain the Constitution, right to privacy? I want to get your take, and if there's any conversations you've been a part of and perspectives on where we're headed and everything being digitized and tokenized, and part of that is fiat currencies being tokenized. Yeah,
I think it's the trend, right? I know, and I'm a bit of a Luddite. I'm 55 years old, and I'm finding myself reaching for my fiat a whole lot less than I used to, right? More and more is happening on your phone with credit cards, et cetera. And my kids laugh at me when I pull out a checkbook. So I think the whole, future trend towards digitization of currencies is definitely here. You're going to see it in smaller, more nimble countries first, Sweden's of the world, et cetera, or in countries that really need it. Maybe it's the El Salvador, for reasons we spoke of. Bermuda, obviously a big initiative, and they have the ability, I think, to be more front-footed, just given the relative size of the country. But I follow what Giancarlo is doing, and I think one of the unintended consequences of the pandemic was a realization from many countries around the use and utility of having digital currencies and how you can more easily move money where it needs to go in digital format, and how many of the existing kind of operational flows around traditional finance and banking are really archaic. And there's obviously technology that exists that could ameliorate a lot of those problems. And so I think it's a steady, it's going to take a while for sure. But I think we'll look back 5-10 years from now, and we'll be much further ahead as it relates to central bank digital currencies than we are today. So I would, I'm long that thesis for sure.
Yeah, and it seems to your point, we're going to the cashless society. It's already happening, but even the tokenization of assets, real estate, stocks, and so forth, everything will be digitized and like 24/7 trading, no opening and closed bell to a certain degree. And it sounds like you guys are building to help facilitate some.
We're absolutely building to facilitate that, and frankly, we're more excited about that aspect of the digital asset opportunity set, or the TAM, if you will, than we are about cryptocurrencies specifically. I'm long-term certainly bullish on crypto. I own it personally, and it's a core part of our business. But when I think about what the TAM or total addressable market for us is, I think it's going to be on the non-crypto side of the digital asset spectrum. And we are, as it relates to this other business we have, doing some very, very interesting proof of concepts right now with some global banks and global asset managers around tokenizing real estate funds and other types of assets. And I think it's only a matter of time before you see other types of securities, stocks, bonds, et cetera, that get tokenized, traded in a much more liquid and fluid fashion. Really, really exciting time to be in this industry, and particularly on the infrastructure side. We've got more ideas than we have people to execute on them, and that's an exciting place to be.
That's awesome. So I want to wrap it up here with some quick rapid fire questions, such as what's your favorite food?
I'm a fish-eating vegan, so I love Mediterranean food.
Very nice. Favorite musician or band?
Any band that my brother Michael, through his Mick Management business, represents. It's in the music business.
Got it. Favorite movie?
Favorite movie, I think, is The Graduate.
Good one. And favorite book?
Anything by Ernest Hemingway.
Very cool. And when you're not at poli-sci or standard custody, what are you doing for fun as a hobby?
Spend a lot of time with my family, my kids. We're big skiers. We live here in San Francisco, so a lot of sailing as well. Sailing, biking, skiing.
That's awesome. Jack, pleasure chatting with you. Really looking forward to future announcements around standard custody and poli-sci as you bring more institutions on board. But thank you so much for joining me today.
You bet. Thank you. It's been a pleasure.
Saving starts with internet and wireless from Xfinity. Because when you get Xfinity Internet and add mobile, you can save up to $400 a year on wireless. Enjoy fast, reliable internet at home and nationwide 5G on the go, included at no extra cost. Get Xfinity Internet and mobile together and ask how to get an eligible 5G phone on us. And for a limited time, $300 back. Don't miss out. Go to Xfinity.com/start saving. Call 1-800-XFINITY or visit a store today. Restrictions apply. Savings based on optimized pricing. Actual savings may vary.
Winning comes in all shapes and sizes. It's different for everyone. One thing is certain. Every day there's an opportunity for a win. Just like scratchers from the Virginia Lottery. Everyday grab and go. Everyday giftable. Everyday fun. It's where anticipation meets instant gratification. Like the new Virginia Lottery Scratcher High Roller Blackjack with a chance to win up to 10 times your prize. Now, that's an everyday win. Drive to a retailer near you. Odds of winning any prize, 1 in 4.16.